Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this short week in which today it's bank holiday, today it's Good Friday, and we have pretty much a lot of information today. Friday, March 29th, we will see core PCE, personal income, and personal spending, but the markets will be closed. So we have to really pay attention to what happened next week on Monday because this data is pretty much super important for the next weeks. But in terms of fundamental data and economic data for this week, let's go with the recap. On Monday, we got basically only new home sales, and those came month over month with a negative value, minus 0.3. Fed said that the home sector needs to cool down a bit for them to really be quite confident of the progression to the downside on the inflation. So that's why I'm reviewing this. New home sales total 662,000, pretty much more or less as expected. But the the big data started on Tuesday. Durable good orders quite in the positive, 0.5 excluding transportation month over month, and overall month over month plus 1.4. And more data from the Case-Shiller home price month over month, basically flat, minus 0.1, and year over year, continue ticking higher, 6.6%. CV consumer confidence tick up more or less like the previous one, 104 versus 104. And we were expecting quite a lot of more confidence, 107. So that's what a little bit of a bummer. On Wednesday, nothing. And yesterday, on Thursday, we got the GDP quarter over quarter for the last quarter, Q4 final. And we got an uptick on the growth. 3.4, we were expecting 3.2, but obviously from the Q3, that's a downward peak, 4.9, the previous one, now 3.4. I think this is good data because even though we are decreasing in the growth for the quarter over quarter, I think we are still above 3%, and as expected, 3.2, 3.4, 3.3. So I think this is good data for profits, for revenue, for earnings, for the overall economy that supports the fact that we are going to soft land most probably. GDP price for Q4 was more or less as expected, 1.7, and this was aligned with the consensus of 1.6, pretty much very lower than the 3.3 that was the previous reading. Initial jobless claims came a little bit lower than expected, 210,000. We were expecting 215, but more or less free data, it's basically flat. It's not spiking, and that's the good thing. Labor market continues to at least stabilizing, and sometimes it's even going lower. So that supports the fact that it remains strong. Labor market remains strong. Chicago PMI, another big data from yesterday, 41.4. We're expecting way higher numbers, and obviously from the previous 44, that was a performance lower. So manufacturing index 41, it's a little bit of a miss compared with the fact that the economy is supposed to be strong. And consumer sentiment, look at this, Michigan's consumer sentiment final for March, 79. 79, that's a huge uptick instead of the 76 and 76 expected. And I think that's what's causing the market to hold and support those key levels ahead of the big day of Friday. Remember again, today is holiday, Good Friday, and today at 8:30 we are going to see this data. We will not be able to trade. That's why this week has been so difficult to trade, because there's a lot of hedging from big hedge funds. There's a lot of positioning, a lot of taking profits ahead of this important data. And next week we are going to see most probably a very volatile Monday. So be prepared for that. But now let's see what the charts were saying throughout all the week, because at the end of the day, when we don't have big data, big fundamentals of big economic releases, we have to really read price action. And this is the Nasdaq weekly chart. And as you can see, there's a little bit of a candle, inside candle after this big green candle. Everyone was waiting for continuation because Nasdaq is this red only minus 0.44 in the week. But look at the S&Ps. The S&Ps were continuing higher, consolidating. Last week, big push, and now we are holding up here. So S&Ps is obviously holding better than the Nasdaq on the weekly chart, and that's because the Russell 2000 is starting to show that he wants to break out. And if it wants to break out and it continues with this strength, this support is pretty much done after all this consolidation. This was quite good to see. If small caps and Russell 2000 wants to break out, it might push like a lot. Basically, 49 to 62%. This is, let me just adjust this, from 210 to this line 227. I think it's pretty much the target for a lot of people for this breakout, and this will push a lot of the S&Ps higher and even the Nasdaq, because the Nasdaq is also trying to consolidate. We are going to see that after the overall equity index review on the individual tech stocks. But for now, the daily, it's super tricky. Look at this week. This week was Monday, Tuesday, Wednesday, and Thursday. This is very difficult price action. We are holding the fair value gap. We are holding the spike through the all-time highs and then slowly dragging lower. But everyone is waiting for today's data. That's why you don't have to really be frustrated, because everyone's feeling this. This is the 30-minute chart. And as you can see, since we tried to go higher and we rejected that all-time high, that was the theme of my last weekly recap. Since that moment, we've been doing, we've been doing the false breakout, lower high, lower high, lower high, lower high, and lower low, lower low, lower low, and lower low. So we are in this unbelievable channel holding, excuse me, up, down, up, down. And yesterday's price action was pretty much the same. Really awful price action, but we can extract a little bit of data from this. Let me just go below to the 15-minute chart. So this was Thursday's move. We tried to push higher during the overnight, but we quickly rejected during the open. We took this liquidity down here and we started chopping around. But at the end of the day, into the power hour, we increase the price action. We increase the open interest to 32,000 on the ES and 8,000 on the Nasdaq. That's why yesterday I was quite bullish. I was not expecting a huge breakout, but my target was up here at the extreme. And obviously this was one of my main targets if we continued consolidating during the overnight. And we did exactly what I was waiting for. That's why I took this trade. So we got our liquidity down here. We started to try to push higher. We remained stable at this buy side liquidity. So this liquidity, this target was not taken. And we just dumped through that liquidity, started to bounce, and we spiked. So after this, I was pretty much quite bullish. And the bad thing is that I didn't take this trade because we displaced quite a lot through this low. But on the 5-minute chart, as you can see, I have marked here this order block. So let me just see it here. So this order block was holding this consolidating lower, push higher, and then they spiked on the open. The rejection, so the target was already beaten. And again, another manipulation lower. We took pre-market low at the open, and that's when I took my first trade and only trade. So I saw these weeks, and I took basically no pullback. I was waiting for a pullback, but I said, okay, this is not too much risk. This is just 300 bucks. Let's risk 300 bucks because I think the liquidity on the pre-market low was quite clear. They went just spiking lower, rag pull to that liquidity, and then rebounded pretty high. Nvidia was quite strong at the open, and I was trying to ride that momentum. So my entry and my target was basically pre-market high. Two rotational moves, 54 points, 1,000 bucks, and that was enough. Why? Because look at these weeks. Basically, this was saying we are not going to go lower, we are not going to go higher. We are just going to chop in between this range, perhaps test the lows, but we are not going to see any big move ahead of today. So yesterday was quite flatlining. Look at this chop barcoding on the 15-minute. This is insanely choppy. And as you can see, nothing changed. The 15-minute fair value gap is still intact. The inverse 15 fair value gap from Wednesday is still intact. We can obviously remove the liquidity that was taken, my trade. Let's remove anything and just analyze in what kind of range we are moving. We are moving in between the range from liquidity from 18,571 and the liquidity on 378. So basically 200 points. That's pretty much the range in this, the points in this range. And I think that's pretty normal. We can do this kind of move on a regular day on the Nasdaq, but everyone is watching. Everyone is waiting. There's no move, no big moves were going to happen on Friday. I just tried to scalp some kind of a range. But if you are not good trading the range days, just forget about this price action because as I said on Wednesday in my video, Nasdaq is not worth trading until the fundamentals come out. The ES was pretty much the same. It tried to go during the afternoon to the all-time highs, 5,300, but just quickly rejected. And obviously, it's more bullish than the Nasdaq because small caps were also trying to creep higher. Small caps are quite strong. So let's see why Nasdaq is weaker. Basically, Apple was minus 1%, and Apple is being beaten down since compare this chart in which we are doing lower highs, lower highs, lower highs, lower lows, lower lows. So Apple, it's quite bearish and it's below the two moving average on the daily, the 20 and the 45. So it's pretty much super bearish. I don't know exactly where expect a bounce because fundamental after fundamental, Apple is being beaten down with news. But let's see the rest because the rest are totally different. Look at Microsoft trying to spike through all-time highs and then slowly dragging down, but still super bullish. Look at this trend. Tesla, it's also in its own world with the change in prices in China, with the development of, I mean, Tesla has its own world and its own catalyst. And for now, I'm not going to go deep, but the trend is also lower. But Amazon, look at this trend, insanely strong, still within this range between the gap and the November 2021 level, 185. Google, it's also, look at this bounce. This bounce was huge. It's quite strong. It's pretty much at all-time highs. Nvidia, I mean, you know everything about Nvidia. It's at the 20 daily moving average, quite important level for support. And Meta, look at this, also in the range. A little bit of weakness up here, but the trend, I mean, it cannot be denied, but it's super strong. So Apple is the one that is not helping the equity index, and I think that's why there's a lot of outflows on the on the tech sector. So the tech sector is, it's been basically, I think there's a lot of profit taking due to the high performance of the sector, and the S&P is way stronger due to the lower value, and I think the growth capability and the setup on the small caps on the Russell 2000. So Russell 2000, it's pretty much helping a lot to the S&Ps. And if we see the equal weighted ETF, the RSP, the S&P 500 equal weighted ETF, it's actually at all-time highs. Look at this breakout. Look at this move. This is pretty strong. And also something to notice, this is the percent of stocks about the 200. It's plus 1% on on Thursday. And as you can see, it's holding and pretty much pushing the 67%. That's quite a lot of momentum for the 200. For the 50-day, it's also in the positive. Look at this push, also momentum. And obviously at the 20-day moving average with 5% increase on Thursday, there's a lot of momentum and push to the upside. So overall, the breadth is quite good. The RSP is breaking out at all-time highs, 169. The Russell is pushing. I mean, there's a lot of positive technical data that we can see. The only thing is that the Nasdaq is lagging behind due to their components, their big components, Apple and Tesla, and sometimes Meta pushing down due to profit taking and outflows from big investors to those other sectors that are outperformed and have a lot of potential to the upside. So there's rotation in these sectors for sure. Something interesting also is that XLF, the financial sector, is just skyrocketing. Look at this move. It's not all-time highs, or yes, it is. It is at all-time highs, XLF. Energy, it's also super bullish. It's almost at the November 2022 level. And look at this spike. This trend is unbelievable. Consumer discretionary, also higher lows, higher highs, being ready to reach this critical level. So everything is trending up, everything is pushing higher. There's a lot of bullishness everywhere, everywhere. So that's why we have to really be patient, to really wait for what is trying the Nasdaq, what is doing. And what I see is that it's just waiting for big information, and this kind of pullback, slow pullback, holding critical levels, ranging on the intraday, is just profit taking, positioning. The market is telling us that we have to be patient for new information and big information to go out. And that's happening today. So after this review, let's see what can we find in other markets that maybe can be a warning sign. Dollar continues pushing higher. Excuse me. Dollar continues pushing higher. This is not inherently this is not inherently bad, because other foreign currencies are way weaker. The yen, the euro, the those are pretty much weaker than the dollar because the economy in the US is stronger than in other countries. So I think there's a big inflows in the dollar due to the strength of the economy in the US. but that doesn't mean that there's rotation inside US money to dollar. So that's why for now, let's see this pivot. But for now, I'm not too concerned about dollar being strong. What I'm concerned is I'm watching pretty closely is the 2-year yield, which is just ranging in between 4.7 and 4.5, and the 10-year, which is also ranging in between 4.3 and 4.2. So these two are ranging also. Yields are also waiting. And I have these three futures on interest rates. This is June, July, and September. So as you can see, they are slightly in the green, but September still shows 5% for interest rates. So the interest rates cuts are still priced in this market. So what can we extrapolate? What is the conclusion of all this? Basically, the divergent, the bearish markets against the stocks, dollar yields are more or less waiting also, are not breaking out, are not pushing down. They are just more or less correlated with the kind of price action that the equities are doing. Nasdaq is waiting, the S&P is holding, the individual tech stocks and the sectors are quite bullish. So I won't be too concerned about the strength in the dollar unless it reclaims all these range and starts pushing higher like this. And yields, the 2-year yield below 4.7, it's quite good, and this rejection is quite important. We should see lower now that interest rate cuts are on the table, and that's the most important thing. The most important thing is yields being under control and dollar not spiking. This is the inverted yield curve, the 10-year minus the 2-year, and we are also ranging. So remember that this kind of chart, the 0% is when the 2-year and the 10-year will not be inverted anymore. So this kind of move, it's the one that worries me, because once we uninvert, that's when the Fed starts cutting rates aggressively, and we might see some breaks on the economy. Something will be broken or something big happen that the Fed needs to accelerate the interest rate cuts. But for now, this is also under control. So overall, we are in a pretty much hold situation. The Nasdaq is still holding, is still in a control pullback, is still in a range, and the S&Ps is even trying to break all-time highs. So I think we have to be optimistic. Let's see what happens with today's data on the PCE. But what is true is that Russell is helping a lot the markets. The breadth is quite good. Sectors are quite bullish also. Sectors are quite bullish. We review all these sectors. And the individual tech stocks, Apple needs to find a bottom, to catch a bid at some level. And that will be helping a lot to the stabilization and also the price action on the Nasdaq. If we have bad data today on the PCE, that is going to really affect the price action on the Nasdaq, and most probably this daily fair value gap will be gone, and everyone will be watching this bottom. So I think there's no other way to trade these markets than waiting for the information and just reacting to what the price action is telling you. Price action is keen always, but we have to also take a look to what the fundamental side is talking, is saying. So I think that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload these weekly recaps every week for you to review with me the fundamental side, the technical side, other markets that may provide us with an advantage. Trading the Nasdaq, I'm focusing on trading the Nasdaq, but other markets are really also affecting the overall performance of the equity indexes. So you have to be aware of those. That's why I put focus and I do these videos. So if you like these videos, follow the channel, support the channel. Thank you for that. And remember that discipline and risk management are key for success. Let's wait for today's data and let's see what happens next week. Next week might be a lot of volatility. So more than ever, be patient, be disciplined, manage your risk, because those will be keys for your successful. Stay safe, everyone, and after today's data, have a nice weekend and see you on Monday.